on this exchange are moving up. But according to yesterday's trading session, we're looking at very, very impressive numbers from a number of equities, and hopefully investors out there are being amused by the movement of or the performance of these companies. But just for context, we're looking at a total of about 168,480 shares, and this was corresponding to a market value of 26,119,050 Ugandan shillings, and that was what was traded in yesterday's trading session. Now, comparing yesterday's performance with the previous data, we're looking at a 9% decline in volume, but a 535% improvement in turnover, and this is all leaving us to a market capitalization of 22.4 trillion Ugandan shillings. Now, the movement of the market capitalization alone will show you how drastic the change was in yesterday's trading session alone. Now, in aggregate, we're looking at 4 Uganda Securities Exchange listed equities participating in the trading, and we ended with 6 gainers as well as 4 losers. Centum Investments led the gainers once again with a 3.14% share price, closing at 259.43 Ugandan shillings per share. It was followed by East African Breweries that also had a movement of 1.35%. Stanbic Bank also went up by 1.21%, and KCB Group also went up by 1.2%. We're looking at the losing side, and Jubilee Holdings came out last with an end-of-day price depreciation of 1.24% and closing at 4,853.52 Ugandan shillings per share. It was followed by Quality Chemical Industries that also went down by 0.09%. We haven't seen any performance, any movement within Quality Chemicals stock, but as of today, we're noticing it coming down by 0.9%. It is also worth noting that it was once called Cipla Quality Chemicals at the beginning of last year, and this massive change due to the pullout of Cipla also led to its stock coming up to where it was by the start of the year. And looking at Cipla, we're looking at it being traded under the ticker symbol QCIL, and it has been listed on the Uganda Securities Exchange since 17th September of 2018. Now, more information on their International Securities Identification Number can be found on the Uganda Securities Exchange website for more information. But in terms of numbers, shares outstanding are at 3.6 billion, and we're looking at a market capitalization of 201 billion Ugandan shillings. Now, in yesterday's trading session, Quality Chemical Industries closed with 55 Ugandan shillings per share, and we're looking at this number recording a 0.9% drop from the previous closing price of 55.5 Ugandan shillings per share. So Quality Chemical Industries began the year with 52.50 Ugandan shillings per share, and has since gained 4.76% on that very price valuation. This is ranking it the 11th on the Uganda Securities Exchange in terms of year-to-date performance. Now, Quality Chemical Industries is the 9th most traded stock on the Uganda Securities Exchange over the past 3 months, and it has actually been traded. It has actually traded a total volume of 14,800 shares, valued at about 790,900 Ugandan shillings over that period. Now, we're looking at that number being achieved as of 18th April of that very same period. Now, let's wait to see if Cipla will be able to add up this lost 0.9 as the week goes by. And let's not forget that today's trading session has already started and the markets are open, so it is worth looking into your portfolio to make the next decision for portfolio development. But looking on to more losers, we are seeing Nation Media Group coming down by 0.07%. Kenya Airways has also gone down by 0.7%. And let's also note that Kenya Airways has been in participation within trade for the whole of the previous week and the beginning of this week. So we're yet to see what has been causing these movements in their stock prices. But MTN Uganda recorded the highest volume of 147,610 traded shares, followed by Bank of Baroda, which you also haven't seen in a while, but recorded a 17,600 trading volume. And the DFCU also came up with 2,270, as well as Quality Chemical Industries with 1,000. Now, other companies that are listed on this stock exchange, like Airtel, did not show any movement, and Airtel is particularly still standing at 70 Ugandan shillings per share. We're looking at British American Tobacco, that is also still at 15,000 Ugandan shillings per share. Bank of Baroda is at 20, and Centum Investments went up by 7.91, closing at 259.43. DFC is at 225 Ugandan shillings per share. East African Breweries went up by 54.95 and stands at 4,138.49 Ugandan shillings per share. Equity Bank went up by 4.94, closing at 1,213.38. Jubilee Holdings went down by 61.18, closing at 4,853.52. Kenya Airways also went down and stands at 110.65. KCB Group is at 924.48, and that is an appreciation of 10.92. MTN Uganda is at 170.73, coming up by 0.73. And we're looking at National Insurance Corporation with 5 Ugandan shillings per share. Nation Media Group went down by 0.37, closing at 524.35. New Vision Limited also stands at 153 Ugandan shillings per share. Quality Chemicals went down by 0.5 and stands at 55 Ugandan shillings per share. Stanbic Bank went up by 0.45 and stands at 37.50 Ugandan shillings per share. Uganda Clays is at 12 and Umeme is at 460 Ugandan shillings per share. Now, shifting our focus to the market indices, the benchmark, which is the all share index, plummeted 26.06, which is a depreciation of about 2.47%, points to close at 1,029.31. Now, this is representing a one-week gain of 0.17%, a four-week loss of 3.77%, but an overall year-to-date gain of 17.97%. The local company index decreased by 1.67% to close at 260.08 points, making it a one-week gain of 0.37%, a four-week loss of 1.19%, as well as a year-to-date loss of 4.33%. Now, that is what is happening on the Uganda Securities Exchange as we speak, and as the market is already open, we're yet to see a lot changing within what we have seen in this recent analysis, because let's not forget, these markets are highly volatile, and we're yet to see companies that haven't been seen in a while coming up or down in terms of share price, and we're seeing shareholders' worries being compounded by a number of factors. But let's look into the Nairobi Securities Exchange to see how it went down on their end. And in terms of numbers, we're looking at about 6 million. It is about 6 million, a total of 6,777,700 shares in 1,068 deals. Now, this was corresponding to a market value of about 133,631,766 Kenyan shillings. And that was this with the previous trading session. Today, the data is actually showing 39%, which is a decline in volume, and 21% as well as a 9% decline in deals. Now, this is leaving their market capitalization at 1.72 trillion Kenyan shillings. In aggregate, we're looking at 47 listed equities participating in the trading, and we ended with 22 gainers as well as 17 losers. Sanlam Kenya led the gainers with a 9.15%, and that is share price closing at 6.20 Kenyan shillings per share. It was followed by Uchumi Supermarkets that also came up by 5.26%. And we're seeing BOC Kenya also coming up by 4.71%. Scan Group also came up by 3.85%. And looking onto the losing side, Total Kenya came out last with a day price depreciation of 6.29%, closing at 20.1 Kenyan shillings per share. It was followed by EGADS that also came down by 6.02% in terms of share price depreciation. Now, EGAD Limited is principally engaged in the growing and selling of coffee, and during the year ending December 31st of 2005, the area bearing coffee was about 131 hectares, and the quantity of coffee harvested amounted to about 233 tons of clean weight equivalent. And the ultimate holding company is actually a company, International de Culture, in terms of intercultures coming from South Africa. And more information on their securities identification number internationally can be found on the Nairobi Securities Exchange website. But it is under the ticker symbol EGAD, and it is actually the 51st most valuable stock on the Nairobi Securities Exchange. Now, in terms of numbers, we're looking at 32.2 million in shares outstanding and a market capitalization of 402 million Kenyan shillings. The current price is actually 12 Kenyan shillings per share, and EGAD actually closed its last trading day at 12.50 Kenyan shillings per share. This was recording a 6% drop in its previous closing price of 13.30 Kenyan shillings. And EGAD actually began the year with a share price of 13.95 Kenyan shillings and has since lost 10.4% off that price valuation. This is ranking it the 50th on the Nairobi Securities Exchange in terms of year-to-date performance. Shareholders' worries in this case are actually compounded by the fact that EGAD has lost about 14% of the price of the stock value from June 10th to date. So EGAD is the 50th most traded stock on the Nairobi Securities Exchange, and over the past 3 months we have seen a traded total of about 42,500 shares in about 53 deals valued at about 542,780 Kenyan shillings, and that was over the period. This is leaving us with an average of 675 traded shares per session, a volume high of 9,400, and that was achieved on May 30th of the very same period. Now, looking into other securities that other equities that underperformed, Liberty Kenya Holdings came down by 4.14%, and Samir Africa has also come down by 4.13%. In terms of highest traded volume, we're looking at Safaricom with 2.4 million traded shares, followed by KCB Group with 890,500, Equity Group Holdings with 663,700, and Centum Investments Company with 624,700. Now, in terms of performance of the market indices, the All-Share Index inched up by 0.02, and that was about 0.02% points to close at 109.98. This is representing a one-week gain of 0.67%, a 4-week loss of 3.21%, but an overall year-to-date gain of 19.4%. We're looking at other remarkable indices that are working hand in hand with the all-share index. And looking at the 10-share index, it came up by 0.09%, giving us a 1-week gain of 1.74%, as well as a year-to-date gain of 24.72%. The 20-share index went down by 0.12%, and we're looking at a 1-week gain of 1.63%, as well as a year-to-date gain of 11.65%. Now, the 25-share index, on the other hand, went down by 0.03%, leaving a 1-week gain of 1.51%, as well as a year-to-date gain of 21.43%. Now, that is the performance of the market indices as of today, and the markets are already open, so we're yet to see a lot more going on. Looking into some of other cross-listed entities on the Nairobi Securities Exchange, we're looking at the British American Tobacco, and they're standing at 353 Kenyan shillings per share. They went down by 1%, with a trading volume of 1,100. And looking into other cross-listed equities, Britam Holdings is at 5.90 Kenyan shillings per share. It went up by 0.22% with 1,100 in volume. Looking into Diamond Trust Bank, we're seeing 46.45 Kenyan shillings per share, which is an appreciation of about 0.45. Equity Group Holdings is at 44 Kenyan shillings, and they went up by 0.05% in terms of share price. Jubilee Holdings is at 170 Kenyan shillings, leaving a volume of 4,000. KCB Group is at 35.20 and Kenyan shillings, and that is an appreciation of about 1.30%. We're seeing a volume of about 15,900. And Nation Media Group is at 18 Kenyan shillings per share, with a decrease of 0.1, leaving a volume of about 1,000. And looking at other cross-listed equities, Uchumi is at 0.21 Kenyan shillings per share. Umeme stands at 14.50 Kenyan shillings per share, with a decrease of 0.25 and a volume of 351,000. So that is what is going on the Nairobi Securities Exchange, and we are to keep an open eye as today's trading session goes on to see how these companies fare up. But we'll be right back after a short break with more insights on financial news that could possibly be affecting the performance of these equities.
Smart 24, driving business.
75 days since the last day of last season. We are ready to do it all again.
Phil Foden is having the season of his life. Brilliant! Just brilliant! That is quite something!
Buy a decoder for only 40,000 shillings and get all the football on DSTV.
Luxury redefined at Seasand Hotel as you indulge in the splendor of elegant living fit for the royalty that you are. Step into comfort, pampering and blissful customer-centric service as you select from our range of comfy exquisite living quarters furnished to meet with your royal preference. Surrounded by scenic beauty, our tropical setting allows you to escape the glamorous ordeal of city life. Our ambient green gardens will guide you to a place of revitalizing rest. The 3-star restaurant caters to your palate, serving your choice menu ranging from exotic cuisines to local delicacies. Our chefs will serve you full course meals for a truly out-of-this-world culinary experience. Our fully stocked bar to whet your throat, from renowned global brand whisks, brandies, gins, beers and wines to our locally celebrated beverages, you will not lack for any brewage. It's an all-new experience in the East at CSUN Hotel. So visit today at plot 15 to 19 Spire Road, Ginger, or contact us on +256 751 719 960 and +256 785 354 614 for reservations. CSUN Hotels, luxury redefined.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda, yeah, the taste of Uganda, the taste of Uganda.
Oh, you see Zizinga. Hey, what is Zizinga? Zizinga! Oh, what? This is blood. Zizinga. Lydia went invisible. Wakati chechi ndako. I need the blood. Hey, Euros for everyone on Go TV. Euros for everyone. Naira. Yeah, people at home watching Euros on Go TV. Euros for everyone. Yeah.
Euro 2024 is for everyone on GoTV. All the 51 games of Europe's biggest tournament live on your TV and on GoTV stream.
GoTV Uganda, love it.
Smart 24, driving business.
Welcome back from that short commercial break, and we're back with more headlines affecting the performance of the East African financial markets. Now, what caught our eye as of today is Nairobi slapping Uganda with fresh hurdle on fuel imports. Now, looking at this, Kenya has actually thrown a fresh hurdle on Uganda's direct fuel import scheme, doubling the bond fee for imported consignments destined for Kampala to about $45 million US. Now, Uganda's Energy and Mineral Resources Minister Ruth Nankabira said Kenya increased the requirement on the size of bond fees to the Vital Tank Terminal International Storage Facility in Mombasa from $15 million US, posing a bottleneck to Uganda's hopes of lowering pump prices of the commodity. Now, VTTI is a privately owned terminal that ties into the Kenya Pipeline Company and the pipeline network in Mombasa and gives access to the Ugandan market and other landlocked countries further west. So a bond fee is a bank guarantee that an oil company importing fuel for the transit market uses to secure duties and taxes payable to the relevant revenue authority should goods be disposed of locally. So the bond can be used to offset taxes in case of the company deciding to dump the fuel locally, and it helps the Kenya Revenue Authority avert losing billions of shillings in taxes and levies. So sources privy to the matter say that the Ministry of Energy in Kenya wrote to the Kenya Revenue Authority to increase the fee, a charge that is expected latest setback, coming in months after delays in issuing the Uganda the NOCE with a license prompted Kampala to take Kenya to the regional court towards the end of last year. So Kenya had in December last year declined to issue the UNOC with a license, prompting Uganda to move to the East African Court of Justice, and UNOC got the license in March of this very year, putting it to an end of a diplomatic spat between the two neighbors. So Nairobi, and while rejecting UNOC's application, cited a raft of reasons, including lack of local footprint of at least 5 retail stations and 5 licensed retail stations. So we're looking at UNOC having also failed to show proof of annual turnover of about $10 million for the last 3 years, even as Kampala held that Kenya was placing unrealistic conditions. And UNOC's maiden cargoes arrived at the port of Mombasa last week as the country moves to end decades of relying on Kenyan oil companies. So the Ugandan government-owned firm signed a 5-year deal with Vital Bahrain amid a fallout with Kenya's decision to drop the open tender system for a government-to-government deal with 3 Gulf majors. So Kenya inked a deal with Saudi Aramco, Abu Dhabi National Oil Company, and Emirates National Oil Company for the supply of fuel on credit for 180 days. So the deal was meant to arrest the weakening of the shilling by ending a monthly demand of an estimated $500 million that oil companies needed to pay for fuel. But President Museveni accused Kenya of a lack of consultations, prompting Uganda to opt for a similar deal with Vital Bahrain. Now we're yet to see how that plays out as the week goes by, but in other news, we're looking at a Canada farm that is not free yet, a whole year after the Kenya project exit. Now, looking at what is going on in this, on the other end of Kenya, Africa Oil Corp still has liabilities amounting to about $1.8 million for its operations in Kenya, and other claims of an unspecified amount from the local community a year after it exited the 3 oil blocks in Turkana oil field. So Africa Oil, a Canadian oil and gas company, in a report to its shareholders for the first quarter of this year, put its accounts payable and accrued liabilities at $11.8 million, down from $14.2 million in December last year, relating to its exit from blocks 10BB, 13T, and 10BA on June 30th. So accounts payable and accrued liabilities mainly relate to liabilities, exit and office close down costs associated with the withdrawal from Kenya, and that was according to Africa Oil in its report to its shareholders earlier in March of this year. So its liability is likely to increase as the company discloses it has since informed of another claim of an unspecified amount from the local community. So after the exit of its subsidiary, Africa Oil Kenya BV, the parent company revealed in its half-year results of 2023 that it had settled about $15.5 million between April and June of 2023 to the Kenya Revenue Authority and other undisclosed partners. So the firm says it is still awaiting the government's approval to transfer its interests and future obligations in the 3 blocks to British oil explorer Tullow Oil. So until May 2023, the 3 blocks were owned jointly by Tullow Oil, which had a 50% stake, Total Energies 25%, and Africa Oil 25%. However, Africa Oil and Total Energies left the joint venture unequivocally and unconditionally, raising doubts on the viability of a project the country had once staked its hopes of altering its economic fortunes by joining the oil-producing club. So on May 23rd, 2023, Africa Oil announced its withdrawal from entirety of the production sharing contracts and joint operating agreements from Block 10BB, 13T and 10BA, and wrote to the Energy Ministry asking to transfer all its rights and future obligations to the remaining joint venture partner, Tullow Oil. So Tullow, which owns 100% of the blocks, has since informed Africa Oil of pending liability to the local community. So the company has been notified by the operator of the project about a claim made against the operator by local companies in relation to past operations, which may relate to the period prior to June 30th of 2023, according to Africa Oil. So Africa Oil ended its interest in the Turkana oil project in May, opting to concentrate in regions with high petroleum potential, and it still has interests in Nigeria, South Africa, Equatorial Guinea, and Namibia. So Africa Oil Kenya BV bought its stake in the Turkana oil project through the acquisition of exploration rights to Block 10BB from Turkana Energy Incorporated. So the exit of the Africa Oil and Total Energies has left cash-strapped Tullow seeking a strategic investor to provide funds and help move the project to the commercialization stage. So the Energy Cabinet Secretary Davis said that the twin exits from the Turkana oil project that started with the administration of the late President Mwai Kibaki had spooked potential oil explorers, and he also revealed that a greenfield investment, which has seen potential investors pump billions into the project and turn it into a commercial production, had been started by the decision by the two multinational oil companies to abandon their equity to Tullow Oil. So CS added that heightened pressure against fossil fuels has meant that prospects for licensing of blocks for a non-oil producing country like Kenya and are actually lower compared to a producing country where market infrastructure has been developed. So we're at a phase where companies like Total and Africa can write off their investments in a block where discoveries have been made, and the risk capital that goes into a block where discoveries have not been made is a challenge. So with the rising chorus against fossil fuels as the world tries to shift to renewable energy, however, hitting the black gold does not necessarily guarantee its production, as investors are shying away from the dirty fuel business. So that is what is going on in terms of news within the East African region. We cannot fail to notice that everything as this week is going on is rotating around renewable energy and oil prices, as well as how governments are trying their best to meet their communal duties as well as reaching tax goals. But looking into global news, we want to understand how your favorite global stocks and indicators have been responding to all these factors. We're looking at the S&P futures coming up by 0.7%, and we're also looking at AI having been powered. We're looking at AI powering the S&P 500 this entire year, and investors should not expect that to change anytime soon. That is according to BlackRock. We're also seeing Japan's credit profile to benefit from higher interest rates, and that is according to a Fitch analyst. And we're looking at a suspected attack by Yemen's Houthi rebels targeting a ship transiting the Bab el-Bab Strait. So we're looking at a slump in electric car demands and the hits on the Mercedes-Benz sales in the second quarter. China's stocks eye gains, and the S&P 500 is steady on Powell, according to the market's wrap. But just to give you more insights on the S&P's effect on these Chinese stocks. Last week we talked about something that is known as the Village, and is mainly known to having been done by Asian investors all the way from the 1990s. But looking at their latest report, we're looking at European stocks edging higher, followed by fresh highs for US equities, as traders are actually held to bets the Federal Reserve will cut interests this year. So the Euro Stoxx 600 benchmark climbed about 0.2% before pairing the advance, and basic resources stocks declined as prices for crude oil and base metals fell. Futures on S&P 500 and Nasdaq 100 were little changed as traders passed comments from Fed Chair Jerome Powell about the US economy. And S&P 500 climbed for a sixth consecutive session on Tuesday, and its longest winning streak since January, after Powell emphasized mounting signs of cooling job market and remarks to lawmakers on Tuesday. Then the Nasdaq 100 also hit a record, and swap traders continue to project 2 rate cuts in 2024. Treasuries were steady, with yields on 2-year securities hovering near 3-month low, on bets they would more likely benefit from policy easing, and a gauge of the dollar was a little changed. So Powell's comments continued to move toward preparing the market for a cut in rates later this year, according to Michael Ferroli at JP Morgan Chase and Company. Powell largely stuck to the script when it came to the economy. So further congressional testimony by Powell on Wednesday and key US inflation and jobs data tomorrow may provide further clues on the policy path. So among individual stocks, we're looking at Europe. Spanish utility and SA climbed more than 4% after agreeing to sell 30% stake in US pipeline firm Tallgrass Energy to Blackstone Infrastructure Partners. Elsewhere, Japanese stocks advanced, while those in China and Australia declined, leaving a gauge of the region's shares a little changed. So China's eked out another small gain in June, hovering near zero for a fifth month, a sign that deflationary pressures continue to impede on economic recovery. So factory gate prices remained stuck in deflation for that very matter. Bond traders are getting ready for China to start pushing back on record low yields, with the central bank now armed with hundreds of billions of yuan of securities at its disposal to sell. In commodities, oil edged lower as concerns about Chinese demand and continued uncertainty over the timeline for Federal Reserve interest rate cuts overweighted signs of another inventory draw in the US. Copper and iron ore declined, while gold was steady. Now, key things to look forward to as this week, as we wrap up the second half of this week, we're looking at Jerome Powell testifying to the House Financial Services Committee, which is happening today. We should look out for that. It is largely going to affect the movement of the dollar, and the charts are going to be crazy as this day goes by. We're looking at the Fed's Austin Goolsbee, Michael Bowman, and Lisa Cook to speak today as well. The US CPI initial jobless claims for tomorrow, and the Fed's Raphael Bostic and Alberto Mosalem to speak on Thursday as well. China trade is to go down on Friday. We're looking at the University of Michigan consumer sentiment, and that is in the corridor of the US PPI on Friday. Citigroup, JP Morgan and Wells Fargo earnings. We're also looking forward for insights on that on Friday. But Other main market moves that we might have probably missed. We're looking at the euro that was a little changed, standing at $1.0821. The Japanese yen is at 161.37 per dollar. Offshore yuan is at 7.2921 per dollar, and the British pound was a little changed at $1.2796. Bitcoin rose by 2% to $59,106.07 US dollars. Ethereum rose by 1.2% to $3,107.75 US dollars. Bonds, the 10-year treasuries declined 1 basis point to about 4.28%. Germany's 20-year declined 4 basis points to 2.54%. Britain's 10-year declined 4 basis points to 4.12%. In terms of commodities, Brent crude oil fell by 0.7% to $84.05 US dollars a barrel, and spot gold rose by 0.4% to about $2,372.49 US dollars an ounce. Now, that has been all for today's analysis, and I would like you should not forget that we are here every single day to give you a broad analysis of the performance of your favorite stocks in the regional markets, the Uganda Securities Exchange, as well as the Nairobi Securities Exchange, as well as what is going on in terms of indicators, stocks, government bonds, private bonds, corporate bonds, and every other financial instrument on the market globally. But I've been your host, Victor Chibera, and we shall meet in our next analysis of financial markets.